Gas prices in Europe hit fresh records amid fears Moscow could restrict supplies of natural gas. Meanwhile, the military conflict between Russia and Ukraine is escalating further, thus increasing demand for the so-called safe haven assets. Now let's take a look at how the market traded in the Asian session today. Moscow immediately responds to any new sanctions imposed on Russia by other nations. However, Russia is not the only country to face the consequences of the sanctions. There will also be economic costs in Europe and the even United States. Energy and metals update highs abruptly and frequently. Amid ongoing uncertainty, traders prefer to put their money in the US dollar and the Japanese yen. This week, the market is highly likely to trade the same way if it did last week. That's the US financial market will continue to enjoy an inflow of capital, which means we will see a stronger US dollar. The new trading week kicked off with a rise in the US dollar index that measures the dollar's value relative to its main counterparts. USDX has approached 99 points for the first time since May 2020. A rise in demand for the greenback also came amid a strong US jobs market report on Friday. The report looked a sharp increase in non-farm payrolls in February and provoked traders' reaction during Asian trade earlier this Monday. Such strong results allow the Federal Reserve to take a more aggressive stance on monetary policy. At the two-day meeting scheduled for March 15 and 16, a 50 basis points rate hike is expected. The dollar-yen pair is moving in the sideways channel between 114.75 and 115.75. The flat movement emerged back in February. The yen is expected to strengthen amid a decrease in stock markets in the United States and Japan today, so the pair may fall to 113.36, rising above 114.71 before going down. So the bearish trend will accelerate. Meanwhile, China's trade surplus widened to $116 billion in January and February 2022, beating market forecasts. The country's imports and exports both expanded. It was definitely good news for market players who trade the Aussie dollar, as Australia is China's key commodity supplier. So the AUD-USD pair soared to the 4-month high, breaking above 0.7400. The likelihood of even higher commodity prices completely offsets a risk aversion amid the escalating of tensions between Russia and Ukraine. Technically, if the quote consolidates above 0.7415, a breakout at 0.7500 may occur. At the same time, commodity markets risk entering a correction, so the price may fall to the 0.7291 and 0.7315 region. And that's it for today. Have a nice trading week and see you soon. Bye.